Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about YUNFENG FIN interim report. YUNFENG Financial Group Limited offers a diverse range of businesses and services, including insurance products, life and medical insurance, annuities, pension, mandatory provident fund schemes, fund and asset management services, financing and investing solutions, securities brokerage and custodian services, financial technology services, principal investment business administrative and trustee services, agency and consultancy services, marketing and public relations services, computer software and hardware development, technical consulting, and technological services. These services cater to various aspects of financial management, from insurance and investments to fund management and technology solutions. The skyrocketing stock price of YUNFENG FIN, a year of breakthroughs. YUNFENG Financial Holdings Limited, HKG 376, has witnessed a staggering surge in its stock price, with some reports indicating an increase of over 472% in the past year. This remarkable growth can be attributed to several key developments and strategic shifts that have propelled the company into new financial technologies. At the forefront of this transformation is YUNFENG's aggressive expansion into cutting-edge fields such as Web3, real-world asset, RWA, tokenization, digital currency, ESG zero-carbon assets, and artificial intelligence, AI. The launch of its RWA tokenization project and approval for virtual asset trading services have further solidified the company's position in these emerging markets. Additionally, YUNFENG's strong mid-year financial performance in 2025 has contributed significantly to investor confidence, with insurance revenue increasing by 11% year-on-year and net profit attributable to equity shareholders surging by 142%. The company's financials have been a major driving force behind its stock price growth. The acquisition of Ethereum as corporate reserve assets and the strategic initiative to integrate these technologies with its insurance operations have also played a crucial role in boosting investor confidence. As YUNFENG continues to push boundaries in the financial technology sector, it is likely that its stock price will remain on an upward trajectory. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by a significant increase in life insurance premium income, tied agency channel revenue, and investment returns. The company also experienced substantial growth in net CSM release, insurance service results, interest income, and dividend income. On the other hand, revenue decline was mainly attributed to a decline in revenue from investment management services and other income, as well as a decrease in trustee fee income and government subsidies due to one-time incentives. Net income and profit margins. A mixed picture. The financial summary reveals a mixed picture of net income and profit margin changes. On one hand, net income increased by 142% to HK $486 million, page 7, and 103% to HK $765 million, page 9. However, it also decreased from HK $558 million to H $916 million, page 21, indicating a contradictory trend. Profit margins show a more consistent increase. Net operating income margin rose by 23% to HK $686 million, page 9, and 44% to HK $382 million, page 22. Profit for the period margin also increased by 103% to HK $765 million, page 9. The inconsistency in profit margins across different pages highlights a need for clarification. Nevertheless, these changes suggest that the company's financial performance has been improving, albeit with some fluctuations. The company's operating cash flow status is a mixed bag. While some pages indicate positive operating cash flow, others show negative or unclear results. On page 29 and 59, the company generated HK $69,583 and HK $62,827 in net balance respectively, as well as HK $1,984,945 and HK $134,370 in net cash from operating activities. Additionally, on page 131, the company's cash and cash equivalents increased by HK $1,617,430, suggesting positive operating cash flow. However, other pages show negative or unclear results, including negative operating cash flow of HK $137.6 million as of 30 June 2025. Overall, it is difficult to determine a clear trend in the company's operating cash flow status. The company's debt level has shown mixed results over the past year. While total liabilities increased by 10.8% to $842,382, page 56, total debt excluding operation-related liabilities remains stable at $13.84 billion, page 35. However, a closer look reveals that total debt has actually increased from $116,977,099 to $126,835,687, page 131. On the other hand, interest expenses have decreased significantly. Finance costs, interest expenses, dropped by 22% to $3 million in 2025 compared to $106 million in 2024, page 9. Additionally, total interest expenses decreased by $22,997, 20.1%, from 2024 to 2025, page 93. And finance costs related to long-term borrowings also decreased from $677 to $3,225, page 102. Overall, while the company's debt level has shown some fluctuations, interest expenses have decreased significantly over the past year. The financial performance of various segments and regions within the company has been analyzed. The insurance segment stood out as a top performer, recording significant profits in both periods, with notable revenue growth. The corporate segment also showed improvement, albeit to a lesser extent. On the other hand, while no segment was explicitly labeled as poorly performing, the corporate segment reported a loss in one of the periods. Management is outlining a strategic expansion into emerging areas such as Web3, real-world assets, digital currency, ESG net zero assets, and artificial intelligence. The company aims to integrate these frontier technologies with various insurance business scenarios. Additionally, management plans to utilize capital for funding financial products and funds managed by the wealth management team, while improving returns on capital and cash flow through a treasury management model. This will be achieved through providing diverse investment opportunities, limiting exposure to loss, and actively monitoring regulatory compliance. The company's financial summary reveals that it has a history of paying out dividends to its shareholders. This indicates a commitment to returning value to investors and demonstrates the company's confidence in its financial stability. That concludes the financial summary for YUNFENG FIN. Feel free to comment below, and I will be happy to answer them when possible.